books and tax prep. We make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. For the local dreamers close by and the ones far away, we create more than a course. We create a brighter day, a community that shows up with support you can feel. We share the tools, we share the light, and make your future real. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. If you've been waiting for a sign, here it is, come on in. You've got what it takes to thrive, and we're with you to the end. For every goal you carry, for every room you want to fill, we'll help you stand with confidence and turn your vision real. Skills without borders, careers without limits, borderless accountants. We built the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. Skills without borders, careers without limits, borderless accountants. This is what we're made for.
What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program.
From every corner you can come. Bring your story, bring your hopes. We'll meet you where you are and help you learn to grow. With U.S. books and tax prep, we make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. For the local dreamers close by and the ones far away, we create more than a course. We create a brighter day, a community that shows up with support you can feel. We share the tools, we share the light, and make your future real. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider sky. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. If you've been waiting for a sign, here it is, come on in. You've got what it takes to thrive, and we're with you to the end. For every goal you carry, for every room you want to fill, we'll help you stand with confidence and turn your vision real. Skills without borders, careers without limits, borderless accountants. We built the
What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program.
From every corner you can come. Bring your story, bring your hopes. We'll meet you where you are and help you learn to grow. With U.S. books and tax prep, we make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accounting. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. For the local dreamers close by and the ones far away, we create more than a course. We create a brighter day, a community that shows up with support you can feel. We share the tools, we share the light, and make your future real.
with 643.33 points. I guess Fury also has is consistent. Number 6, Ramos Jonathan, new name, I guess, if I'm not mistaken. It's first time to be on rank 10 or top 10.
You don't know how to share your screen?
639 points, point 32. And we have our top 7, is Marielle with 635.99 points. And on rank number 8, congratulations, we are so proud of you. Conyado Winpol Kenji, BA Scholar, 629.34 points. And on rank number 9, we have Karcha Kuwenchi Gel. So this Quincy also is a consistent top performer with 625.33 points. And to complete our top 10 performers, we have Domaliang Laika with 621.33 points. Laika is one of our interns. Congratulations, our overall top 10 performers. Let's give them a round of applause, guys. That's it for me, Chris. Back to you.
Thank you, Lou. Appreciate you. It was a quick notice.
Yeah.
Yeah, good job. So, congratulations, everybody. For those feeling competitive and you have not seen your names there just yet, don't worry. It's just 2 weeks, right? You can still catch up. We still have many more weeks to come. There's a lot of opportunity for you to be able to get your name on the board. All right. So without further ado, let us now open today's session is session 9, right? Not day, because we don't count by the days, because some days we actually skip lessons, because like on Thursday we did on the first day we did the orientation. On Thursday last week we did Q&A, and Friday we did the summative test. So just for proper tracking, we count it by session, not days. But technically we are on our 11th day, right? Are we? Yeah, 11th day. All right. So what are we going to be covering today? This is actually the most interesting part in all of the course. Okay, this is the meat of what we're studying for, the income, right? This is primarily the reason why taxpayer file their tax returns. Okay, so we'll cover today specifically wages. Wages that is reflected on an income document called W-2, right? So W-2 will be very familiar to you because you will deal with this form almost all the time, okay? And you guys should have already access to the documents that I've already shared, I think yesterday in Google Classroom. So I've already shared with you the tax organizer, the 1040 from the previous year, including all the income documents that we're gonna cover in this module, okay? So if you guys would like to follow along in the exercise later, make sure that you have those open and your ProConnect also ready, okay? All right, so on the slide right now, you got 2 columns. On the left, what module 1 gave us. So on the right, what this unit will do. Okay, so from module 1, we have finished the Alvarez family. So not finished that we finished all the entire return, but what we did there was determine the filing status, the dependents, as well as the kitty tax for Elena. Okay, so We determine who must file with the residency status, the filing status, and then we also made it a point to read the prior year return, okay, as well as the tax organizer. So by now you're already familiar with the proper steps in doing tax preparation. Again, for emphasis, you do not go and enter income documents right away into the tax software. What you do, the very first thing is look at the prior year return, okay? And then look into the tax organizer, and that way you will know and be familiar with the client that you are working. Make sense? And today, we're going to be working on a new client. These are the Whitfields. They will be filing filing jointly, and they have several income documents, guys. Right. So in one 1040, we will be working on 2 W-2s, and then there will be 5 1099s. Again, that's not 1099. It's read as 1099. Okay. You don't read it any other way. It's always 1099. If you read it any other way, it's going to sound weird. Okay. And then we're going to make you familiar with a consolidated broker statement and SSA 1099. This is for the Social Security benefit. Okay. But that would be all throughout this module. All right, so what we're going to be covering today and how many minutes we're going to be allotting. First, we're going to cover the ones that I shared with you in Google Classroom. We'll cover the prior year return. We'll read through that together, and then the organizer. So we're going to input the basic information of these taxpayers into the software. We're going to read W-2. So there will be 2 W-2s. We'll read them, because again, the purpose of this course is not for you to be a data encoder. Okay, you need to understand what you're entering, so that you're not just you're just not knowing the how, but you're also knowing the why. All right, and once we're familiar with the return and we've covered the boxes in W-2, we're going to be entering those into ProConnect, and then if we have time, we'll wrap it up with a question and answer. Okay. All right. So before I go through this slide, let us open the tax organizer and the prior year return. All right. So again, we are supposed to be reading the prior year return before anything else. Let me see if I can share my PDF file. Okay, a second, I'm struggling with my mouse. All right. So you can see my screen, correct? And you're seeing the prior year return. Right, so what you can see here is a Form 1040 for 2024. This is a simulated return, so it doesn't really exactly look like the actual return, but you know, the sequence and all the relevant information is all here. So for this taxpayer, again, for 2024, they are filing married jointly. You do not assume that the same is the case for 2025. That could change, right? What happened? Maybe the spouse died, you know? Maybe they decided to file separately, right? Maybe they got divorced. So that's something that you would need to know. And where would you know that? In the tax organizer, okay? So you don't assume. And then they have we have the names of the taxpayer and their address, their social. This is a mock-up social, guys, okay? And then last year they did not have any transaction related to digital asset. You do not assume that this is the case. This is the same case for 2025. Okay, you need to ask them, or you need to read through the documents and see if there's anything that resembles transaction related to digital asset. Okay, you do not assume when we're preparing taxes. We ask questions. Okay, so they're not blind, and they're not I think one of them is above 65. So, but we know from here that they're not being claimed as a dependent and no one is blind. Okay. So they don't have any dependent. And from here, this is very important, guys, that you need to read. Okay. So from what you can see here, even without looking at the tax organizer, you can see that there are wage income earner. Okay. They are a wage income earner. So they have a W-2. And when you're reading through this, you will likely expect that in the year that you're preparing the return for, that they would also have a W-2. Okay. After that, you have box 2A that relates to interest. Okay. So you would also see here that there will be accompanying schedule called Schedule B for interest. Okay. Then they have dividends as well. So there is a 1099 that relates to this. And then very important, guys, as for all others, they didn't have that related income in 2024. So there were no retirement distributions, there were no social security distribution either. But again, you do not assume, okay? You do not assume that that would be the case for the following year. So still read through the tax organizer. And then line number 7, very important, guys. So there was a capital loss, 3,000. And I already emphasized that last time. When you see a flat 3,000 on capital gain or loss, that is likely an indicator that there is a carryover for the following year. Okay? Unless this is what, 2,500 of loss, 1,900, anything that's not flat 3,000. Okay. But when you say flat 3,000 loss, that's 99% sure that there is a carryover for 2020 or for the next year. Okay. So that is your cue. Do not miss it. Especially again, if this is your first time preparing the return, meaning the client had a different preparer from last year, because it's easy to miss. Okay. If this is a repeat client, that's not a problem because the software will carry forward the losses automatically into the succeeding year. Okay. But it doesn't mean that you would not look at it still. Okay. Just make it a habit. And then this is a Schedule 1, line 10. There is no additional income. So we'll cover that as we go along as well, what is covered in a Schedule 1. And then so far, there's also no adjustments. So the more complex the returns are, you will have items in these lines, line number 8 and line number 10. But this one, pretty simple. It's just that there's just so many income documents, okay? And then last year, 30,600. I'm not sure if this is a standard deduction or itemized deduction, but what you can know if there is a Schedule A that is attached, Schedule A is for itemized deduction. If there is a Schedule A that's attached, that's likely, or that is an itemized deduction, meaning they had more itemized deduction than the standard deduction. Okay, from the previous session, we already covered that. For this line item number 12, it's the greater of the standard deduction or the itemized deduction. Okay, so we can browse through that actually. So here on the second page, you can actually see that there is a Schedule A. Okay, so Schedule A, there was taxes totaling 9,400. There was a mortgage for 16,400, and they also had gifts to charity. So that totaled 30,600. Can anybody do a quick research as to what is the standard deduction for 2024 for MFJ filer? I betcha that should be less than 3,600. Can you do a quick research and put that in the chat, please? 29,200. Okay, so that makes sense, right? Because they had more itemized deduction than the standard deduction, so the itemized deduction prevailed. Okay, if this is a lot for you right now, don't worry, we'll cover deductions as we go along in the future slide. Okay, so we're just covering that briefly. So get ourselves familiar with the Form 1040. Okay, so after that deduction, you now come up with a taxable income. So the taxable income would be all income on line item number 9. So that's your wages, your income, or your interest and dividends, less the capital loss. So the net or the total income is 165,500 less deductions. So you come up with a taxable income of 134,900. Okay. So our take on this, notice line number 12, 3,600. That is because they itemize. Line number 7 shows exactly 3,000. Again, that is what I was talking about. When you see this number, look at the Schedule D. The Schedule D will tell you if there is a carryover. Okay, so if we go down, Schedule D is here, capital gains and losses. So you see that the net short-term capital loss for the year was 2,100, and the long-term capital loss was 4,700, a total of 6,800, but only 3,000 was allowed. Okay, so whatever is the excess of 6,800 minus 3,000, that would be our carryover for the following year. Okay, so 6,800 minus 3, that's 3,800 up carryover loss in the next year. Okay, and then last item here, no line number 4, 5, or 6 amounts in 2024. So that talks about the IRA and the retirement distributions. So these are the schedules again. Normally a 1040 will only have 2 pages, but there will be schedules that will be attached to it depending on the income situation of the taxpayer. So Schedule A for itemized deduction, Schedule B for interest and dividends. We already sort of get ourselves familiarized with that last week. And then Schedule D for capital gains. A little trivia, guys. When I was new in the tax world, whenever I get interviewed, I would always mention these schedules because that would, help demonstrate that I know what I'm talking about. So for example, I would say, I'm very familiar with what Schedule B is, what goes into there. I'm familiar with Schedule C for self-employment. And, I mention these things. Why? Because I want to set an impression before the employer that I know what I'm talking about. Okay. So I hope that, that made you get a little tip. All right, so Schedule B, you know it by now, that's interest and dividends. Schedule D, capital gains and losses. Okay, so at least you know 2 schedules already. All right, and then this taxpayer is also a California resident. So California, they have a version of the 1040. They don't call it 1040, rather they call it Form 540. Okay, for a California resident income tax return. If it's non-resident, it's called 540 NR. So basically what we do here is we'll look at last year, whether there was a tax due or tax payment, and I also look into it for the sake of consistency. Okay, I don't worry too much about the state because in most tax software, whatever you input at the federal level, it gets carried into the state. Okay, and then whatever also that's missing in the state, it will be highlighted in the diagnostics. Okay, so you rarely make a mistake on the state if you do the federal correct. If you do the federal incorrectly, then you will also naturally do the state incorrectly. Make sense? All right, so that's the 1040 for 2024. Now let's go to the tax organizer. Let's get to know our taxpayer. Right, so there is no universal template for tax organizer, guys. Some tax firms, they don't even have tax organizer. Okay, so there is no universal template for a tax organizer. But insofar as my experience is concerned, the best tax organizer template there is the one in TaxDome, because it's just automated and it's designed in a way wherein when the taxpayer is a repeat client, it would just ask the taxpayer, some sort of a confirmation. And if things don't apply to them, the questions get skipped, right? Because imagine if you're a taxpayer and you answer a lot of questions from the tax organizer. Like, I don't like filling out forms, right? So, and it's time consuming. So if you send out a tax organizer questionnaire to a taxpayer and there's a lot of questions, the tendency for the taxpayer is that they would leave things blank, right? They would not even finish it. So, the best tax organizer is it reads through the prior year return and only asks questions that are relevant to the taxpayer, okay? So in this case, the tax organizer that we have is kind of comprehensive. But again, just to set expectation, not all tax organizers look like this, right? So from this tax organizer, we have several sections. Let's cover section 1 first. So it talks about the taxpayer, the occupation. So you can see here that he retired in June 2025. That is a Q, right? If there's a retirement, there may be a 1099-R, right? And then for the spouse, the occupation is a school district administrator. And then they still live in the same address in Sacramento, California. You look at the prior year. This is also one thing that you have to look into because some taxpayers, they move, right? They move address. So you need to have the updated address. So 95818, look at the address, it's still the same. So they did not move, okay? And then the Gregory turned 67, Renee is 63. They're not any of them is blind. Was there an IP pin? You already know what an IP pin by now. So they say no. And then was there any notices that was sent to them? There's also none. And then on section 2, it talks about their filing status, right? So as of December 31, 2025, they are still married for 34 years. That's a feat. Did this change during the year? The answer is no. Was there any dependent or anyone living with them that they had support, that they provided support during the year? The answer is no, because the daughter already moved out back in 2019. There's also no dependent that is being claimed. And in section 3 would be the employment, okay? So did either of them stop working during 2025? The answer is yes. Gregory's position at the company that he was working for was eliminated on June 30. So he did not take another job. So in this case, he had a W-2. And in the US, if you get unemployed, the state would still provide you support in the form of unemployment compensation. Okay, so that's the beauty about a country like the US. So if you get unemployed, you get unemployment compensation, and you get a 1099-G, right? So a 1099-G for unemployment, and we will also cover that in this module. So that's your Q, okay? Because some taxpayer, they would give you this information in the tax organizer, but they may fail to send you the document, okay? So when you see this and you sift through the documents and you don't see a 1099-G, that is your key to ask that document, okay? So, hey, client, I saw that, we've heard that you that you were unemployed at a certain point during the year, but I don't seem to see a 1099-G. You may have missed to send it. Can you please send it, okay? So that is your cue. That's you being thorough, okay? Next is, if so, what happened after that? So he claimed unemployment in July and it ran through September. His company pension started October 1. So there is a pension, okay? So when there's a pension, there's gonna be a 1099-R. So he also applied for Social Security and the first payment arrived in January 2025. He turned 67 in February. So there's going to be also a Social Security income document in the form of an SSA 1099. Okay, you can read, take notes of those, but we're also going to be cover them as we go along. Okay, now, I'm just giving you a preview. And then, did either of you start receiving Social Security? So the answer is yes, because for Gregory, that was the case for Gregory, not for the wife. Did Renee employment change at all? No. So Renee is still a W-2 earner. And then, did you take money out of any retirement account? So yes, there's also a distribution from an IRA. There's a separate section for IRA in this course. But if there is a distribution in an IRA or a retirement account, this also is at the 99R. Okay. So what's another takeaway from this? When you look at the taxpayer and they're 60 plus, that's common for them to have 1099Rs. Okay, so retirement and Social Security distributions, but it's not exclusive to the 60s. There are some who are in their 20s or 30s that can also have 1099R. Okay, we'll cover that in the 1099R section, but you would wonder if the taxpayer you're working on is 60 plus, but they don't have a 1099R. Okay, that may be something you would need to investigate. Okay. All right, so next section here would be income documents. Normally in a tax organizer, we ask those questions from the taxpayer, and then they attach the documents along with it. Okay. So from what we can tell here, they have a W-2, a 1099 for the interest, dividends. They also have a 1099B, B for broker. So if they are capital or there are stock transactions, that is reflected on a 1099B statement. There's also a consolidated broker statement. So I'm not going to explain what it is now, but there is a separate session for that. The 99R, I already mentioned about that, as well as SSA. And then 1099G for the unemployment. There's also a W-2G. This is for gambling, right? So Gregory had a slot machine win at the Thunder Ridge in August. So whenever you win a lottery or any gambling activity, that winning is supported with a W-2G, okay? And then 1099C, this is related to credit card. MISC, related to any income, but most of the time 1099 MISC is for rental, but it could be something else, okay? If it's not for rental, it goes to others, okay? And then there's no 1099 NEC. NEC, again, is for non-employment compensation. So there's none of them is self-employed. There's also no 1099K. 1099K is also something that is related to Schedule C, okay, or self-employment. Now, with relation to investment and sales, did you sell any stock, funds, or other investment in 2025? So yes, that explains why there's a 1099B and a broker statement. Did you know what you originally paid for them? So from just read through the answer. Sometimes we ask for this because some broker statement, it does not provide us with the cost basis of the sale, okay? And when it comes to that, we need to really ask them, or sometimes we search the internet, okay? Like how much was the selling price of that stock at this given date, okay, in case they are not able to provide us. Did you have any capital loss in the previous years? They were not sure, but we already looked through the 2024 return and we confirmed that there was. And then any virtual currency or digital assets bought, sold, or received? The answer is no. So our answer on this question in this portion of the 1040 is also a no for 2025, okay? All right. And then other income and one-off events. So gambling was a one-off event. Canceled credit card was also one-off. One-off meaning it does not repeat year after year. Were you involved when that debt was canceled? No, we have equity in the house and the retirement accounts. This matters because some cancellation of debt could be active or passive income. Prizes, awards, duty, or rebates. So there was 1,500 rebates from the Water Authority for the lawn conversion. That probably was a 1099 MISC. And then, did you receive a state tax refund? Probably there was a form franchise tax board. So as you can see, last year they had a refund from the state, right? Of 612. Some taxpayer, they're not sure. Renee's aunt gave us 8,000 towards the roof. Any gifts or inheritances received? There is another section for gift, but this one is not relevant because it's only 8,000. The IRS is very generous when it comes to the threshold of reporting gifts. Okay, it's in the millions, not in thousands. So any life insurance proceeds? No. Lawsuit? No. And then we already covered this in the prior sessions, the foreign accounts, right? This is reported again on Schedule B, Part 3, right? So the F-bar, remember the F-bar? So this is another question that is asked in a tax organizer. So was there any account outside the United States at any given time in 2025? No. Signature authority? Also no. Any income from outside the United States? No. Okay. So we know that likely the Section B, Section 3 of the Schedule B would be answered no. And then Section 8, anything else? So this is where we ask the taxpayer any relevant information that we should know as a tax preparer, things that we have not asked in the tax organizer, okay? So for them, they say that Gregory's last employer paid out unused vacation in the final check. It is in the W-2. Also, we were told Social Security is not taxable. So we were surprised to get a form for it. And we still have not spent the money out from the IR withdrawal, if that changes anything, okay? This is very common misconception, guys, that Social Security is not taxable. Right now, I'm telling you, it depends, okay? It depends on the level of income of the taxpayer. Some could be taxed, okay? So it's not 100% tax-free. And the argument of the taxpayer is that, again, Social Security is a tax that they paid on their income already. Why is it that when it's distributed, it's getting taxed again, right? Which is valid, but you know, it is what it is because that's what their law says, right? We can argue with that. All right, we good so far? So now we've already covered the prior year return and the tax organizer. We already know a bit about our taxpayer. Copy? All right, so I guess for now, let us use this time to build our return, okay? So if you have your second screen, then you can follow along with me. Otherwise, you can just simply watch, okay? We're gonna build the return live so that you guys know how to navigate your software. But right now, you should already know how to input the basic information, right? In fact, you should already know how to create a tax return to begin with. Agree? Who here has not created a tax return yet? Everyone, right? Everyone has created. Nice. So while you're waiting on me to open my ProConnect, please open your own and then let's do it together. Donald is newcomer. That's okay, Donald. You can follow us along or you can choose to just watch for now, okay? And my personal rule when I'm preparing a return, guys, is I copy paste. I don't type the information because I may run the risk of mistyping the information, okay? And I don't want to make a mistake on any return especially the basic information, um, such as the social, the address, even in the more importantly, the income numbers, right? Because that can cost you your job if you're a tax preparer, right? Okay, so Donald, if you can follow along. So there's a video on how to create a ProConnect account. Just look that up in the videos made available in the portal. So once you're in ProConnect, click on tax returns and then select create tax return. Okay. So we know that the taxpayer is new, so it's not going to be in the drop down list just yet. So create add new or click on add new client instead. Then we're making sure that we're creating an individual return or a Form 1040. And again, just to be on the safe side, we do copy and paste. So I'll copy the first name, including the middle name, and then the last name. And then the date of birth is February 14. So the tax form, the date format for the US or for the IRS is month, date, and year. Okay. So some other countries, they do date, month, and year. Okay. So just don't confuse. The IRS uses month. So that's 02 for February, 14 for the date, and 1958 for the year. Okay. And then for the social, I think I can copy paste. This is very important that you have your social security correct. It's easy to make a mistake on the social because there's several digits, right? Oh, why is it not? All right, and they have provided their email as well. Some taxpayers, they don't provide an email, so that is fine. If you don't have it, then don't worry about it. Some, they don't even provide a phone number, but in this case, they did. So let's just say 916-555-0173. Okay, so here you can click on next already. And then next one more time. For the tax return name, you can modify or you can customize. All right, so just like that, we already have our return for the Whitfield, but we're not done just yet, okay? So the default page for ProConnect goes to profile. So for federal, it's defaulted to e-file. If you want to, if their tax return is gonna be filed by paper, then you have to take this off, okay? And then you don't need the state reason for that because you have not entered the address, okay? So for you to be able to continue inputting the basic information, click on Input Return, okay? And then you go to Client Information. And I already told you that in this menu right here, anything that is bold, that means there's already data entered, right? Everything that's not in bold, meaning they're blank, okay? And also, guys, the way Lessert is structured is similar to ProConnect, okay? Lessert is another tax software, by the way. All right, so you can hide that sidebar and then define the state. So they are a resident of California for the full year. They did not transfer. We're going to update the filing status to married filing jointly. We already know that they're still filing MFJ according to the tax organizer. We have the occupation. So because he's retired, so he no longer has an occupation, right? So we can just put in retired here. Right? So he's not a dependent of anybody. He is not blind. And then we're going to enter the information of the spouse. Okay, so don't assume that the spouse has the same last name, okay? Some spouse in the US, they don't carry their spouse's or their husband's last name. But in this case, they have the same, so we don't replace it anymore. Also, in this case, where we had the husband as the first taxpayer, in this case, we also referred to the husband as the primary taxpayer. Okay, the primary taxpayer, and the wife as the spouse. In some cases, the wife is the primary taxpayer and the husband is the spouse in some cases. And it matters, guys, that you know who the primary taxpayer is and you know who the spouse is. Okay, you have to know that. And how do you know? The first one that is written on the form is the primary taxpayer. The second one is the spouse. Okay, you have to know that, and we'll cover that in the coming session. Okay. All right. And then the occupation of the spouse is a school district administrator. Her date of birth is, what's her date of birth? Okay, 09/22 1962. All right, school administrator, we can say that. It doesn't allow us. Right. And then also not a dependent, also not blind. And then this is the part where we enter their address. Okay, so best practice, don't type, copy, and paste. Some software, when you input the zip code, it automatically inputs the city and the state, but not for ProConnect. Okay. All right, so one thing you notice if you go to profile, because we have already indicated the address, see, it automatically updates the state of California and it's defaulted to e-file. Okay. All right. So I guess we're good with the basic information. All right. So one thing we do not forget to do, because we already know that there is a carryover, right? There's a carryover loss. Not forget about that. We can just maximize this now so that we can view the form. So if you have a wider screen, you may want to do split. So what I always do is I have the input form and then the form view. Right, so this is the input and this is the form view. Most software has this capability. So Lacerte has it, UltraTax has it, Drake doesn't have it. So Drake, Pro Series, they don't have a form view. And that's what I don't like about Drake. Okay. So right now, you see that there's not much going on the form, right? You only have the form 1040, and then you only have one schedule 1A because they're already above 60 right? So they get extra 6,000 deduction. And then there's no Schedule B yet. There's no Schedule D, not even Schedule 1. So because we have not entered their information, but you already are able to see what their standard deduction is for 2025. 33,100 because they are one is above 65 years old, right? So we know that for a taxpayer above 65, he gets an extra 1,500 in standard deduction. Okay, copy so far? And then plus during Trump's administration, he instituted a 6,000 extra deduction on top of the 1,500 and the 3,000 deduction on top of the standard deduction. All right, so do we tick the live with spouse under filing status? Good spot there, Josh. Let me see. Where do you see that? Live with spouse, yes. Although it doesn't really matter because it would still, if you don't take this, the system will default as if they live together. Okay, you can take this or you may not. That is really up to you, but doesn't matter. How come my line 37 is 150K? Line 37. Line 37 is amount owed. Why is that, Kiko? What did you do? Why do you have 150K in tax due? Did you enter in advance your information? So if yours is 150K, simply be income information already. So what you do is you go back to your input return and go to view all input, see anything that is in bold, and then look at your return itself. Look at here. If there's anything that you have inputted here, that line 37 is a result of what you have on top. Okay. If you can share us a screenshot of what you're seeing, we can possibly help you. Okay, send a screenshot on the chat box. But guys, what he's talking about is line 37 showing 150K. From what you can see here, line 37 is the amount owed. Okay, so the amount owed is a calculated field. Okay, so if there is an income that's probably in the millions because it's generating 150K in liability, that is the case. Okay, so he must have, Kiko, you might have inadvertently entered income amounts in your tax return. Okay, so everybody else are seeing this. Can I see a thumbs up? If you guys are, for those who are following, okay? All right, so you're all good, Kiko. No, so you're looking at Schedule 1A. So Schedule 1A, the 150K that you're seeing there is it's a fixed amount, okay? It's a fixed amount that is used for calculation. It's nothing related to the income. Are we okay so far? All right, all good, very good. So our presentation. Just do a quick summary of what we've covered so far. All right, so we already know the information about our taxpayer, that Gregory is age 67, past the age of 65, hence the additional tax deduction, standard deduction of 1,500. He's a retired employee and received Social Security benefit for the entire year since he got it back in January. Renee employed the entire year. She has a 403 plan and a 401. Sorry, so she's got a 403. This is retirement benefit from her employer. which is something that we will tackle. But when you see that there is a retirement plan for a taxpayer, that also impacts their W-2. Okay, and we'll cover that shortly. And then we already know that, again, they're filing jointly and they have all these other income situation. Okay. All right. So 4 numbers. And by the end of the session, all 4 should feel obvious to you. So maybe not. So before we go to this slide, let us now open another document, which would be the W-2 for both of the spouses. Okay, so we should have 2 W-2, one for Gregory and the other one for Renee. Okay, so let's look at the W-2 first of Gregory. And if I may just share, guys, when I was pretty new in tax prep, I didn't know what I was just simply following the W-2 when I'm entering into the tax software. I don't know what the codes are. I don't know the relationship of box 1 to 3 and 5. I was just simply looking at each boxes and make sure that they are entered into the tax software. That's it. So I've been doing that for the longest time, and that's why I felt like at one point I even asked myself, why did this tax firm require someone to be a CPA to do this job when this is really just about data entry? Like, I don't feel that I need to be a CPA to do this job, really, because it was data entry, right? So I felt empty at that time. That's why I kept questioning myself. There should be more, right? There should be more. And again, because I was learning in an unstructured environment at that time. Okay, so you guys are a lot luckier than I am. All right. So let's open both W-2s and we'll cover each one briefly. Okay, so let's cover first the W-2 of Gregory. So you see that this is Gregory's, right? You can see here employees information. And then when you're looking at the W-2, you make sure that it's for the appropriate tax year, because some tax clients, they send W-2s from prior year. Okay, and you don't want to make a mistake of entering all W-2s regardless of the year. Make sure that you're only entering a W-2 for that relevant tax year. I made that mistake before, guys, right? Where a taxpayer entered or sent out a prior year W-2, and I also entered it because I was in a rush. I wasn't being thorough. I entered it and it inflated the taxpayer's income, right? So make sure that when you're looking at the tax document, you look at the year. It's very, very important. Because again, taxpayers, they just send whatever documents they think are relevant to the tax return and they don't know any better, okay? So look at the tax year, very, very important. Now, what you see here is box number 1. This is the taxable income, okay? This was the taxable income of Gregory, and box 2 would be the federal income tax withheld. This is what the employer withheld and remitted to the IRS, okay? Box 3 would be the Social Security wages. We'll cover that later, what it is, and then the withholding in relation to Social Security. So this is what they were talking about, right? So they essentially, Social Security is a tax, right? And this is what they're giving back when they retire. So that's why most taxpayers, they feel like, why is it that their Social Security benefit is being taxed again when it's distributed to them, when it was taxed when they earned it, right? When they earned their income. So aren't they double taxed? Essentially, yes, unfortunately, right? Especially if they still have a lot of income, even if they're already past the age of retirement. Because some taxpayers do that. They have a lot of investments. They have a lot of interest, dividends, and in that case, the retirement can be taxed. Okay, so In the US, they always talk about, uh, tax the rich, not the poor, right? And that's their way of doing it, like from there in the way they administer taxation. So if you earn more, you pay taxes more. All right, and then another thing is box 5, which is the Medicare wages. Medicare is for the healthcare, so that's also a tax essentially. So there are 3 taxes that you can see here. Withholding, that goes to the IRS. This one goes to the Social Security Administration. I don't know where these go to. Who administers their health? I don't know. That could be something that you can research on. All right, and someone just called for a water break from Annabelle. Good job, Annabelle, for the reminder. All right, so it's 8:02. Let's go on a water break for 5 minutes and have your water, guys. See you in 5.
From every corner you can come. Bring your story, bring your hopes. We'll meet you where you are and help you learn to grow. With US books and tax prep, we make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. For the local dreamers close by and the ones far away, we create more than a course. We create a brighter day, a community that shows up with support you can feel. We share the tools, we share the light, and make your future real. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider sky. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. If you've been waiting for a sign, here it is, come on in. You've got what it takes to thrive, and we're with you to the end. For every goal you carry, for every room you want to fill, we'll help you stand with confidence and turn your vision real. Skills without borders, careers without limits, borderless accountants. We built the books and tax prep. We make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills with we lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without
No, I'm sorry. I was so excited to to return. I failed to unmute myself and made myself seen. All right, so my bad. All right, guys. So this is where we stop, right? The form W2, and this is again for Gregory, the very taxpayer. So you can see here different boxes, right? So boxes 1 to 6 related to income and taxes. And then you also, some fields are filled out depending on the income situation of the taxpayer, okay? Box 12, you have code C, code D, and double D. There are meaning to those boxes, and we'll cover them shortly. And then box 13, don't forget that you have to replicate this in the software. If the retirement plan is marked as X, you put X, right? And then box 14 relates to the state, right? So some state, they're not relevant, some could be relevant, okay? Especially CA, New York, and NJ. SDI stands for State Disability Insurance, I think. And then very important, box 15, okay? So for this state, because for this state, the income, that taxable income may be different, okay? So do not assume that the box 16 is the same as box 1, okay? So box 1 would be the federally taxable income, and then box 16 would be the income that is taxable to the state, okay? And then box 2 is a federal income tax withholding. Box 17 is the state, okay? So you do not make a mistake of missing this information, because your return may still be okay at the federal level, but not at the state level, okay? Some instances, guys, you may see 2 states here, maybe even 3, okay? So enter all, okay? If you see 2 states like CA and the New York, enter New York as well, right? So make sure that you enter all the information again on box 15 onwards that's related to the state. Right. So why box 1 is not box 3 and not box 5? So as you can see here on the case of Gregory, his box 1 is 47,592, but his box 3 and 4 or 3 and 5 are different, okay? So in box 1, there was an elective deferral on box 12. You can see box 12. Elective deferral is 4,320. That's code D, which is a deduction. This is not taxable income. And then there's also box 12, code C for group term life insurance. This is taxable income, not a wage, but a taxable income. So if you bring out your calculator, guys, so what if, let me drag my calculator in here. So really the income of this taxpayer is the one in box 5, 51,912. That is the gross income of this taxpayer. And why is it only 47,592, which is the taxable income? Reason for that is because he's got 4,320 of retirement benefit that is non-taxable. And then in this case, the group life insurance is already part of the wage. Okay, so 51,912 less the non-taxable retirement benefit or retirement contribution. So the taxable income is only 47,592. Okay. But again, if you look at the, if in essence you want to ask, how much did the payer really earn? He earned 51,912. That's his gross income. Okay. So if you're asked what is the gross income, you don't look at box 1. You also don't look at box 3, right? You don't look at box 1 and box 3 because box 3 also has a limitation. Okay, and we will tackle that later on. There is a limitation. And why is box 3 and box 5 placed here in the W-2? Because these are basis for the Social Security withholding, and then box 5 is the basis for the Medicare withholding, right? So the Social Security withholding is not based on box 1. So as the Social Security, so as the Medicare tax, they have different bases. Okay. So box 1 and box 16 is the same thing. Again, no, not all the time. Okay, not all the time, because box 16 is the state wages. Okay, so you can see that as we proceed now with the W-2 of the spouse, right? So as you can see, the spouse, this is now for Renee. Okay, Renee, this is not called Renee, it's Renee. Box 1 is 71,200. Look at her taxable income in California is 74,400. Okay, so reason for that is because in California, that 3,200 of retirement contribution is taxable. Okay, so if we bring out again our calculator here, so essentially this taxpayer earned how much? If I ask you, how much did Renee make as a gross income? What's your answer, guys? 77,200. Okay, that's really her gross wage, right? So if we calculate it back, how it became 71,200, that's 77,200 minus the 71,200. So there's about 6,000 of difference, right? So that 6,000 is the one in box 12 code E. Okay, so what is code E? We will get to know that later. Okay, so this part is non-taxable. Okay, now for the state, the difference between the state and the federal is how much? 74,400 minus 71,200. That difference is the code W-2, which is 3,200. 3,200 is the HSA contribution. So there is also another portion for HSA. These are benefits, okay? So we're not going to cover that in detail on this session because today we're only covering W-2, okay? So, but these are the relevant boxes that you should know when you don't really memorize these things. you just need to know so that you understand the W-2, right? Like what's going on with this taxpayer, okay? So again, you whoever asked the question on the state and federal, it's not always the same, okay? And be very careful because some tax software, they default, right? Like you see earlier in the taxpayer, in the client information, ProConnect defaults the taxpayer's status as single, right? So there are default settings in the software. You have to review them. So some software, they also default box 16 as if it's the same as box 1, because that's almost always the case, but not all the time. Okay, not all the time. So when you're entering the W-2 information, you have to review the tax return and what is showing on box 16 if it reflects what is in the W-2. Okay, because if you don't, the tendency is you may have this as the income in the state, which is already incorrect. Okay, so you have to review. Make sense so far? So now let's go to all right, so you remember these numbers, right? So 4 numbers, and by the end of this session, this will become more obvious to you. So 47,592, that's Gregory's box 1 income. These are the wages that he earned for 6 months. 51,912 is Gregory's box 3. And notice it is higher than his box 1, right? Then 71,200, this is Renee's box 1 wages for the 12 months of Renee, because Renee worked for the entire 12 months. And 118,792, this will go into the line 1A of our form 1040. What it is a total of the box 1 of Gregory and box 1 of Renee, because these are the taxable income to them. Okay? So because 3 different taxes measure pay 3 different ways. Income tax measures one thing, Social Security measures another, Medicare measures a third. The W-2 reports all 3, which is why one form carries 3 wage numbers that are supposed to disagree. Not all the time though, not all the time. So some cases, all box 1 or boxes 1, 3, and 5 could be the same. Okay, but not all the time. Okay, so get that idea tonight and you will never miss enter a W-2 again. And I'll show you that there is a tendency for us to miss enter boxes 3 and 5. There is, okay, because some software, I'm not sure with ProConnect though, some software will copy box 1 into box 3 and 5 automatically. As soon as you enter box 1, the boxes 3 and 5 gets automatically filled with box 1 number. And again, when that happens, do not just take them as they are. Compare them with the actual tax document, okay? All right, so we'll talk about the boxes now in detail. So the top half of the form, box by box, with both clients side by side. Now, box 1, wages. So this includes wages, tips, and other compensation. Gregory has earned 47,592. Renee, 71,200. This is the one that goes to form 1040, again, line 1A. Nothing else on this form goes there. Now, box 2 is a federal income tax withheld, 5,180 and 7,940. Where this goes? It goes into line 25A of the form 1040. So this is the tax that they already paid. This is not an income. right? This is a tax that they already paid to the IRS in the form of withholding, okay? So every year, somebody adds box 2 to income. That's a mistake. Box 2 is never an income. It's the taxes that was already paid. So the money was already sent to the IRS on the client's behalf. Who does it? It's the employer, okay? The same premise as what we have in the Philippines, right? Most of the time, when we're an employee, the employer withholds the salary or taxes from our salary and they remit it to the tax authority. Same thing with the US. They also have that concept. But one of the key difference though is in the Philippines, if we are purely income earner, it's the employer that will substitute file for us, right? So we don't do the tax filing, it's the employer that does it for us. But in the US, they don't. The employers don't file the tax return on behalf of the employee. Okay, the employee is responsible in filing their own tax returns. Okay. Right now, box 3 would be the Social Security wages. Notice both are higher than box 1. Box 3 is capped each year and deferrals do not reduce it. Box 4 is the tax withheld on it. So that's the Social Security wages. There is a cap. Okay, there is a cap on Social Security wages. I'll demonstrate that with you later. But for now, can someone research it quickly on ChatGPT? How much is the Social Security cap for 2025 so that we can use that as an example later on? Okay, I need that number and that to you later. So thank you, King. That's 176,100. All right, now box 5, Medicare wages and tips. So same figures as box 3. But Medicare has no cap at all. So no cap. That is why when we ask for the gross wages, you look at box 3, not box 1 and not box 3. It's always box 5, okay? Because box 5 does not have any limit or no capping. So any high income earners, they get to pay Medicare taxes for as much as what they earn, okay? Boxes 7 and 8, Social Security tips and allocated tips. 0 in this case because they are not, usually tips are for those who are working in service-oriented industry like restaurants, fast food, but not for our taxpayers. So that's why you don't see any number on boxes 7 and 8. All right, so now, if you look at the boxes 4 and 6, right? Boxes 4 and 6, you can just double check this. So for Gregory, the box 4 is 3,218.54. If you divide that by 51,912, that's exactly 6.2%. Okay, so that means Social Security withholding is at 6.2%. Okay, so can you confirm that that is the case? If you divide 3,218.54 by 51,912, that should be 6.2. And that is the same case for Renee. The 4,786.40 is also 6.2% of 77,200. Agree? Is that the case? Now for box 6, the 752.72 for Gregory is exactly 1.45% of box 5, which is 51,912. Can you confirm that that is the case? And same thing for Renee. 1,119.40 is exactly 1.45% of the 77,200. Can you confirm? Yes. So total 6.2 and 1.45. How much is that? 6.2 and 1.45. 7.65, right? Not Not 15.3. Where did you get to? Maybe times two, right? Because of the spouse. But for each one, that's 7.65. Right. That tells you guys that each taxpayer in the US is taxed at a minimum of 7.65. And not even 7.65 because they have withholding, right? On box two. So that's how much they are taxed. Whatever is withhold on their salary, they also pay 6.2 on Social Security and 1.45 on Medicare, right? So that's how much they pay in taxes, right? Not just 7.65, okay? Don't get me wrong. That 7.65 is just the total of the Social Security and Medicare. That's on top of what they pay in terms of withholding. Okay? So, correct seeing. That's the total of their FICA taxes. We'll talk about that maybe in the upcoming slides. Okay? But remember that number. Okay? Remember that number because there is a correlation to that when it comes to self-employment taxes. Okay? So, these two taxes are, in our case, in the Philippines, sorry for those that are in India and other countries, but as an example, in the Philippines, we have Social Security, right? And then we have PhilHealth, and then we have Pag-ibig. These are taxes that are paid by the taxpayer, also are paid by the employer. So there is a counterpart from the employer. And the same thing with the US. That 7.65%, that's also what the employer is paying. Okay? So a total of 15.3% taxes, half of which coming from the taxpayer and half of which coming from the employer. Okay? So that is why, guys, a lot of employers in the US, they don't employ employees anymore. They do contractors. Why? Because if you're a contractor, the employer no longer is obliged to pay the 7.65% in Social Security and Medicare. That's a lot. That's a lot of savings. And that's also why we have a job as tax preparers. Because tax firm owners, they don't want to employ people in the US, for one, because they're already expensive. Plus, they pay taxes. Plus, they pay retirement benefits. Plus, there's a lot of pay. There's a lot of fees involved in employing someone. Okay? So that is why we have a job, either as bookkeeper, a VA, tax preparers, because they can save a lot of money, right? And that's why we study really, really hard to become competent at what we do so that we can also compare with our counterparts in the US. Like, you don't need to pay, you don't need to hire someone in the US if they can hire someone as equally competent in the Philippines and save money. Make sense, guys? Okay, so that's one of our advantage. Think of that. That's why you don't forget about the 7.65 tax. Okay, that's the reason why we have a job. One reason, not the primary reason, but one reason. Okay, think of that. All right, but there's more to that when we come to self-employment. Okay, there is more to that. So remember that number 7.65 and 13.5 if total. Okay. So box 4 should be 6.2 of box 3. Box 6 should be 1.45% of box 5. If either is out, the W2 is wrong and you are reading the wrong box. Okay, so make sure that it's correct. And usually it is when you do W2. But if you enter it wrong, like if you enter the box 3 and 5 wrong, then the withholding would also be wrong. Okay, so that's why you need to be thorough. Okay, so we're all okay on this slide, right? So it's not a rate that changes every year. No, it's not a rate that changes every single year, Jason. This is fixed until the Congress would probably repeal it with another law. But this rate, the 6.2 and the 1.5%, are fixed. Okay. All right. So furthermore explanation why box 1 is not box 3. So I already mentioned that earlier. The difference between box 1 and box 3 for Gregory is exactly 4,320, and that's for his 401k. 401k is a technical term for a retirement benefit. So he contributed to a 401k, which is when you make a contribution to this retirement plan, your contribution is non-taxable. I don't know if there is a counterpart of that or like a similar setup in the Philippines, but when we contribute to our retirement fund, a portion of it is non-taxable. Okay, so that is the case. So that 4,320 that Gregory contributed to his retirement account is non-taxable, right, for federal withholding. But it is taxable in as far as Social Security benefit is concerned. Okay, make sense? Because you are talking about two authorities here. One is the IRS, which takes the money from box 2, right? The other authority is the Social Security Administration. That's another entity. It's like PhilHealth. It's like Pag-ibig. It's like SSS for us, right? The BIR and the SSS, there are two different entities. Copy? So box 2, that goes to the IRS. So the IRS is more considerate. Let's say, hey, you're contributing to your retirement. Let's not tax that contribution, okay? But the SSA, they don't care, right? I don't care if you contributed to your retirement account. I don't care. I will get the entire 6.2% from that pay, okay? But they're not very, what do you call that? They're not very greedy, right? There's also a cap, right? So King already indicated that amount on top, 176,100. If the amount of income is above 176,100, that excess is no longer taxed at 6.2%. Okay, so only a maximum of 176,100 is taxed at 6.2%. The rest is not. Okay, so if the taxpayer earned 500,000 for the year, the difference between 176,100 and 500,000 is no longer taxed at 6.2%. Okay, so they're not very greedy after all. But that is not the case for Medicare. Medicare does not care. Okay, so Medicare will tax the taxpayer the entire 500,000 at 1.45%. Okay, so since Medicare says, I only tax 1.45%, not 6.2%, so I will tax everything. Okay, make sense? All right, so that's pretty much it. The boxes, and then we'll proceed with the boxes that you see on box 12, the codes, right? So these are the common. There's a lot more, right? There's a lot more codes in box 12, but these are very common. So when you see box 12 code D, that is for 401k, and that is the case for Gregory. So 401k, it reduces box 1, but not boxes 3 and 5. On the case of Renee, she has box code E, which refers to a 403B, right? And 403B, I think because she's government, or this relates to schools and nonprofit organizations. So she's got 6,000. This is also not taxable at the federal level, okay? Not taxable as far as the IRS is concerned. Now, if you see code W, this is called this is for HSA contribution. HSA stands for Health Savings Account. Okay, so health savings account may be similar to our PhilHealth. Okay, so Renee made a contribution of 3,200, and the 3,200 reduces boxes 1, 3, and 5. Okay, so anything that relates to health savings account, it reduces all boxes. Okay, so that means the IRS does not tax it, the Social Security Administration and Medicare do not tax contribution to health savings account. Okay, that is also why HSA contribution are limited, like it's capped. So the employee cannot just say, I will contribute everything to HSA because it's not taxed. No, you cannot. Okay, there's also a cap when it comes to HSA contribution, precisely because it's non-taxable. Okay, So we will cover that as we go along. Okay. And HSA, by the way, is one way that a taxpayer can save on taxes. So if someone come to you and say, hey, I'm earning so much, but I'm also paying a lot on tax, what can I do? Right? So that's where you look at, are you contributing enough to your retirement benefits? Are you contributing enough to your social security, to your health savings? So these are areas that you look into, that you will suggest the taxpayer should do in order for his or her income to be taxed at the least possible amount. Okay, so this is called tax planning, right? So there are a lot of ways in order for a taxpayer to save on money if they plan. Now the case is the taxpayers do not know these things because they're not tax professionals. It is our job as tax professionals to let them know about it. So when we prepare the returns and we see that they earn a lot, but they're not maximizing their deductions, then that's where we come in and say, hey, before we review your return, can we talk about these things? Because this year you lost these opportunities to save on your taxes. We want to make sure that next year is another story. Okay, so that is one way that we can provide value to our taxpayer clients. And this is also one good thing for you to learn, right? If you are going to go out there and look for an employer, one way that you can differentiate yourself from some tax preparers who just know how to input is that you know these things. When you know these things, you can become valuable. You can command a good rate, and you may become hireable, right? Because this information sets you apart from someone who just knows how to enter information in a tax return rather than understanding what they're entering into the tax return. Okay. And mind you guys, there's a lot out there who's been doing tax returns maybe for 2-3 years, but do not understand these things, because that was true for me, right? That was true for me. So if you guys are saying, oh, I may not have a chance at getting a job, because most of the tax firms are looking for someone with experience, but that should not prevent you, right? That's how you navigate yourself, or that's how you will present yourself in an interview. If you know these things, if you mention these things in an interview with someone, you may get the job even if you don't have an actual experience, right? So especially if you say, I'm not just a mere tax preparer, I understand what I'm doing. So when I look at the tax returns, I also take a look at opportunities for the taxpayer to save on money. Right. So are they maximizing their retirement contribution? Are they maximizing their health savings accounts? Right. So if I see these things that are not being maximized, when I have the opportunity to review the tax return with the taxpayer, I make sure to bring that up. Right. So again, it's just really a matter of how you set an impression before an interviewer. And most likely the interviewer is actually the firm owner, guys. Because those that are looking for employees in Upwork, in Online Jobs PH, these are small firms, right? So small firms, it's actually the owner himself or themselves that are interviewing. Okay, because big tax firms, they don't look, they have headhunters, right? So because they can afford. Okay, so that's the premise of health savings account. You do not forget about it. You just don't simply enter those information. You have to know that it actually is a tax savings mechanism. All right. Now, group term life over 50,000. In the case of Gregory, it's 312. So this 312 is a taxable income, okay, on the part of Gregory. And then cost of employer health coverage, 9,600 for Gregory and 14,400 for Renee. So these are purely informational. They do not impact boxes 1, 3, and 5 in the W-2. All right. So when you see these numbers, don't assume that it is a deduction. These are purely informational. This is the employer cost in providing you health insurance as an employee. Okay. how many minutes we have? All right, so let's just run through this. Boxes 10 to 20, the rest of the form. So box 10 would be the dependent care benefits. This is not the case for a taxpayer, but just so you know, box 10 covers dependents. This goes to 2441, and anything amount that goes above 5,000 is taxable. Also, if this was not used to spend on dependent care, it also becomes taxable. So this is one benefit of an employee who has got young kids. So the employer pays 5,000 non-taxable again, but this amount has to be used. If it's unused, then it becomes taxable, and anything above 5,000 is also taxable. Number 11, non-qualified plan distributions is very rare. I have not seen this myself. So if you go to the W-2, we're talking about these boxes, okay? So box 9, 10, 11, okay? That's what we're talking about here in this presentation. And then box 13, statutory employee retirement third-party sick pay. These are statutory employee. We'll cover that when we go to Schedule C. Retirement plan limits the IRA deduction. Okay, so most of the time, if there is an IRA contribution, the W-2 will have the marking on 13 on box 13, so you don't miss. It's easy to miss this one. It's easy to miss the box 13, but you don't. Okay, please don't miss that. If it's tick mark, you have to tick mark in the tax software as well. We'll show you that a little shortly. And then box 14 is other. So these are related to the state. Box 15 and 17, I already mentioned that this one relates to the state, okay? And 18 and 20, local wages. So California typically don't have local wages, but most of it is New York, right? New York is one of the most expensive place to live. They have state tax at the state level. They also have tax at the municipal level or at the city level, and they even have tax at the borough level, right? So it's a case for New York. I don't know why, but it's just structured that way. That's why it becomes a very expensive place to live in. All right, now so we're gonna be entering the W-2. This is the most exciting part. Let's make it quick because we only have 15 minutes. All right, so let's go through each of our documents. Again, the rule is we don't type, we copy and paste, okay? So that's not what I wanted. Where is my input form? Okay, so let's put this on the side. So we have a side-by-side view, okay? So, and maybe zoom it out. Okay, so now we are in our table of contents for ProConnect. Now we're going to enter income, right? So income will go in this portion here. So as you see, box for income, we have wages, interest, and everything else that relates to income. So now we're gonna click on wages. And when entering a W-2, you will be required to input the employer identification number. So you just have to look for that somewhere. Type that in here. And then sometimes the state also has its own identification number. So in that case, you can copy this number here. This is for the state. And then just so you don't get a diagnostic error, you want to say you verify that information. So click on state ID verify, okay? Because otherwise it may result to a diagnostic error when you check your return. And then the name of the employer is Pacific Grid Utility Corporation. And then the address. Right. Address is in Sacramento. Oh my God. My mouse is not cooperating. You can do it from your end as well, guys, okay? Just follow along. Oh, shoot. So in this case, I will just type Sacramento, CA, zip code 95818. And it's not a foreign address, so don't take that. See, this is where it matters, right? So you would know who the spouse and the primary taxpayer. So we're entering the information for the primary taxpayer, so we don't tick mark this, okay? The spouse is Renee. So now let's input box 1 of our W-2. Let's see what happens, guys. So enter and then hit tab. See, it automatically inputs boxes 3 and 5. This is where you need to be careful, okay? Because that is not always the case, right? That is not always the case. So we want to fix that. So federal, let's input this first. Now we know that our box 3 is not 45, not 47, but 51. So let's overwrite that. When you overwrite that, it automatically computes the 6.2%. It always does. Same with your Medicare. You fix that. That 753 is auto-calculated. All right, maybe we can, there you go. Then we don't have box 7. So what I would do, just to make sure that I don't skip any box, I go box 1 all the way down, okay? So box 7 is nil, 8, also nil, 9, 10, 11. So I go to box 12. So box 12, I got code C. Some software, they don't have that description, but ProConnect has, which is good. And then box D. So some software, you just have to manually type the code. There's no drop down. And then 964. All right, so we're done with boxes 12C, D, and DD. And then now box 13, right? Easy to miss, right? Again, you don't. So just tick mark, no, not statutory, but retirement plan, right? So you put a tick mark because there's a tick mark on your W-2. And then you go to box 15. Where is box 15? Right. We know that box 15 is CA. See here, state wage if different. So what ProConnect does is that if it's the same, it will just pick what is in box 1, okay? So if you don't put anything here on box 16, the system will just pick up box 1, okay? Let's try that. So for now, let's assume that it's the same. So I mean, it's actually the same, right? So we don't put anything. And then income tax withheld for the state is 21,400. So there's no local wages. All right, see here, box 15 is here. This is where you indicate CA state, okay? And then there's also another field that you can type your number here, but this is not the exact place or the right place because these are all overrides. So input the state withholding would be in here. Okay, so now that we have done that, let us refresh our form so that you will have an understanding of what that impacts the return. So 47,592, this is exactly what's in box 1, right? So that goes there. And then the withholding tax that goes to the bottom part here, 5,180. So it goes to line item, line number 25A on the tax return, okay? So what does that mean? Again, is a payment already, all right? It's a payment. So in this case, if the taxpayer only earned this much, he will actually get a refund of how much? 4,732. Why is that? Because out of that income, he's only taxed 448. But because there was a withholding of 180, then he gets a refund. But in this case, you will ask this question, like, this is weird. Why is there so much withholding? Something is wrong on the return. Don't assume that because there's a huge refund, that means you did the return right. There could be something missing because it doesn't make sense. Why would an employee allow his employer to withhold a huge amount when he knows that he's barely going to be taxed for that income? Because withholding is something that is taken from the pay stub, right? So of course, if you're earning income, you want to maximize the income, right? You want to receive as much cash as much as possible, right? So this does not make sense. An employee allowing an employer to withhold a huge amount. So if you're, again, preparing return, try to make sense of the numbers, okay? Don't just input numbers. Try to understand what's going on the return, okay? So we don't have time. We only have 6 minutes. Let's just prove one point, okay? Before we end today's session, I will continue tomorrow with Renee's W2. Let's just prove one point, okay? So there was a number that was shared by King earlier, the 176,100. I'm not sure if this King is a joint or single taxpayer, okay? But let's just try. So for example, let's say Social Security wage is 176,000. And let's refresh our form. And just try to do a manual calculation. All right. So the 10,912 is that, who's fast in calculation? The 10,912 divided by 176 is 6.2%, correct? Exactly 6.2%. But what if this was 180,000? Sorry, not 18. 180,000. So is 11,160 divided by 180,000 6.2%? Still 6.2. So maybe the limitation is not 180. Can you check for 2025 how much is the Social Security? Let's say 250,000. Let's just be wild. All right. So is 15,500 divided by 250,000? Still 60.2%. Let's be wild. 300,000. Weird. This should not be the case. Okay, hold on. Not here, not in the return, but okay, this is not the case for other software that I know. Okay, not for the software that I'm using, but ideally, ProConnect should not be computing 18,600 for 300,000 income because this is capped. Okay. Let's see other taxes here. This is a bad example. Sorry, guys. I didn't know that ProConnect behaves this way. So as you can see here, there is 900 other tax because he's now getting a refund of excess taxes. I'll cover that later, but this is a bad example. ProConnect apparently does not have a set limit for social. Okay. But what it should do in other software, what it should do is it will limit the social security tax withheld. After 176, 100, the excess will not be taxed. But I don't know what ProConnect, it allows this computation. Okay, so sorry to confuse you guys about that. That was a bad example. But just remember again that Social Security is capped at 176, 100. Other than that, the 6.2% no longer applies. Okay, but Medicare is correct. This one is correct because there's no capping. Even if the income is $1 million, it's still going to compute 1.45%. But Social Security is capped. Okay. But ProConnect is not a good example to use for that. Okay. I hope that did not confuse you guys. Are you guys okay? I think it changes. I'm not sure. Every year, if the threshold for Social Security changes every year, I don't think so. It is not benched on inflation. All right. So with that said, today's session we've covered up until the W-2 of Gregory. Tomorrow we'll continue with the W-2 of Renee. Okay, and maybe we'll cover another document. All right. So let's correct this before we go. How much was the 51,912? Let's correct that before we leave. Okay. And then let's refresh. All right. Are we good so far? Now you know how to input a W-2. Now you know how to read a W-2. Okay. You do not just input. And we'll reinforce that even more tomorrow when we enter the W-2 of Renee. Okay. And you also know about HSA. Okay. Don't forget about that. That could be your ticket to unemployment. Not just HSA, but the retirement account. Because that really demonstrates that you know what you're talking about. Like even if you just had a training, but you know these things, that means your training is not basta-basta. All right. So with that said, let's wrap up today's session. I know that you had some questions, but we'll make time tomorrow. Okay. Who's our prayer close? Mary Lou. Right. Let's end today's session with Mary Lou leading the prayer. Go ahead, Lou.
Thank you, Chris. Everyone, let's pray. In the name of the Father, the Son, the Holy Spirit. Amen. Lord God, we thank you for guiding us through a new week of U.S. tax preparation training. Thank you for the knowledge we gained, the questions we asked, and the challenges that helped us understand and grow. Lord, we are grateful for every trainee who continues to show up, learn, and do their best despite their own responsibilities and challenges. Please give them strength, patience, and confidence as they continue this journey. When the lessons feel difficult or confusing, remind them not to give up, but to keep learning one step at a time. Thank you for Chris and for the time, patience, and knowledge he continues to share with us. Bless him and the entire Borderless Accountants team as they continue and support us throughout this training. As we start week 3, help us remember what we have learned and give us the wisdom to apply it. May we continue to support one another, ask questions without fear, and grow not only in knowledge but also in confidence. Please continue to guide us, bless our training, our work, our families, and the goals we are working hard to achieve. We place our learning journey in your hands. In your name we pray. Amen. In the name of the Father, the Son, and the Holy Spirit. Amen.
All right. Thank you, Lou. And thank you, everybody, for today. We'll see you guys again tomorrow, same time, same channel. Bye for now.
Recording stopped.
What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for